KARME, and we're using our strategies, our financial strategies, tax strategies, and business strategies. Hello, my friends. Welcome. Share, share, share. We're just going to wait a moment while we get started. And we'll just get started here in just a moment. Right now, we have a full office, but I'm going to go over a few things that you need to know. A lot of common questions that we're getting for personal tax and business tax, things that you need to know for the 2022 tax season. So share, 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 like, comment, subscribe. Members, you know what to do. You interact with us here. You get the information with us here, and we give you discounts on your services. Being a member with KARME is super beneficial because you get access to webinars and trainings and a nice and easy system, and we help you file. So lots of tax planning throughout the year because we are wealth builders. And if we haven't met yet, my name is Jessica Elvira. I am KARME CEO, and I am here to make millionaires. That's what I do. What I was put on this earth to do. It's my ministry. Whether you're our member here at KARME and we're using our strategies, our financial strategies, tax strategies, and business strategies to help you keep more of your money, because it's not about as much as you can make, it's how much you can keep and reinvest, right? That's the key to the game. And so whether it's with our members or through our associates in mentorship and teaching them how to make millions within the tax and business industry, that is what we're here for. So you will want to like, comment, and subscribe, because when we drop these, it's very informational. Get a pen and a piece of paper. Remember, you need to share, 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 share. So we're just going to give it just a few more minutes while we wait for people to join, and we will get started here shortly. Okay, give us one moment and just share, share, share. And then again, if you haven't met me yet, you don't know who I am, my name is Jessica Elvira. I'm KARME CEO. I'm a financial advisor. I make millionaires. I'm a business coach, a mentor. That's what I do here at KARME. We're here to help people grow in many ways. I share tax tips, advice, and wealth management. I'm going to show you how to make your money go further faster. Okay, so you'll want to like, comment, and subscribe. If you have any questions, I want to make sure that we're getting to them in the comments. So just go ahead and leave any comments that you have in the comments. Tag the person that you need to see this, and we will get started here in just a moment. We're going to go over a lot of common questions that most people have going into the 2022 tax season. And we're going to start off with our most common questions first. And if you have any questions that we're not covering, then you can put them in the comments and I will be happy to readdress them. And in the meantime, I want you to share this with as many people as possible, because remember, this is my ministry. Making millionaires is my ministry. That's what I do. So share this with anybody that you know that needs advice going into the 2022 tax or the 2023 tax season, and that way we can help guide them for free, because this knowledge is valuable in itself, but to get it at no cost, my gosh, what a blessing, right? And that's what I aim to be in your life, is a blessing. So we have many ways to get started. You can visit us at www.mykarme.com. That is our website. You can see everything that we have to offer our members. If you're one of our members, you know, put a like in the comments, put a thumbs up, let them know that me and you, we rock together, right? You're here with us, you're part of the community, and that's exactly what we do here. We are a community of people and a community of educators. We provide education-based services to our members across the country at an affordable rate. And that's what we do here at KARME. And because we're on a mission, we want to help bridge the wealth gap through educational services. So help us on our mission, share, 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 and like, comment, and subscribe. We're going to go ahead and dive right in now. The most common question is that I have for the 2022 tax season is, when am I going to get my file? Because last year and the year before that, there was like extreme delays. And here's the thing, folks. I don't think that there's going to be a whole lot of delays because we don't have the stimulus attached to it. We don't have the EIDLs attached to it anymore. You should receive your refund within 21 days of submitting it online. And if you are one of those poor, unfortunate souls who has to mail your file in for whatever reason, then yeah, you're looking at around 6 to 8 weeks turnaround on your file. So it's by the time you stop thinking about it, it'll come. All right. But if you're filing online, if you're e-filing, then you should expect it within 21 days. And if you need help e-filing or mailing in your file, then KARME is definitely here to help. Just go to www.mykarme.com and you can get started or download the mobile app. Give us a call and we'll be happy to help. Matter of fact, we have been helping people over the last week receive their refunds in advance. The IRS isn't even open yet, and we've been able to give them pre-acknowledged advances through Santa Barbara TPG. That is a third-party bank that we work with that allows you to take a loan out on your anticipated tax refund amount for a small fee. This small fee of 35%, but you can get up to $7,000. And if you need it, then that is available for you. However, as a financial advisor, I do advise that if you can wait, then wait. There's no need in paying extra fees if you don't need it now. But if you need it now, we have it for you now, and you can have your funds within 24 hours. You can actually get this cash advance up until March 15th this year. So if you find yourself in a situation where you need your tax refund sooner than later and you need it within 24 hours, then we are here to help you and we can have that funded to you quickly. And that is a beautiful thing. So, speaking of when the IRS opens, the IRS opens and starts accepting tax files January 24th. So a lot of people are getting their W-2s now and they're starting to gather their mortgage documents and their charitable donations, their business expenses, profit and loss sheets. Gather all of that information together. We can actually get your taxes filed now, put them into the IRS queue, and then you're first in line come January 24th. And that's when they'll start accepting returns and filing. Another question that I have is about the earned income credit and child tax credit. How much is it this year? Well, it's not as much as last year. It really isn't. What you're going to find is that the child tax credit and the earned income credit has reverted back to 2019 standards. So that's pre-pandemic standards. So before we were getting $3,600 per child during the pandemic, but now, or $3,000 for children, over the age of 6. But now it's $2,000 per child. And if you're filing without a child and you have earned income credit, instead of receiving $1,500, you will now receive $500. If you were expecting a big refund this year, I would plan for something else. They will be less, and there's no amount that your preparer can do to make it go bigger, unless you have contributions to an IRA and other different strategies. So if you're talking about the child tax credit and the earned income credit specifically, then it is $2,000 per child. And the earned income credit has reverted back to pre-pandemic settings. So if you do not have a child, then you receive $1,500 in earned income credit. Last year, you will be receiving a maximum of $500 this year. Another question that I am getting is, why was my IRS refund reduced? Your refund can be reduced for a lot of different reasons. It has to deal with a lot of, maybe if you had past due federal tax debts or state tax debts, state unemployment compensation, child support, spousal support, student loans. There's a lot of things that are federally backed that can affect your tax refund. So before filing your refund, my biggest suggestion is that you go work out payment arrangements with those things. If you have a payment arrangement, then they're not going to garnish your tax refund. So you just need to be proactive when it comes to your budget. You need to be proactive when it comes to your finances and take care of it. And then it won't get garnished. Okay. Another thing that I am getting questions about is another question. Let's see, what are we getting here? Can I claim my girlfriend as a dependent? Okay. This is a touchy subject because I get a lot of husbands wanting to claim or spouses wanting to claim the other spouse as a dependent because they're not working and they're paying the majority of the bills. Your partner must be a member of your household, meaning that they have lived with you for an entire calendar year. The law makes exceptions for temporary absences, such as vacations or medical treatments, but your home must have been the person's official residence for the year. And then, yes, they can be claimed as a dependent, but not on your file. So, which leads into another topic, okay? Their spouses. So, when you're talking about someone living as a dependent, that means you're getting a $500 credit. It's a reduction of your tax debt by $500. But when you have a spouse, okay, when you have a spouse, then your standard tax deduction goes from 18,000 to 24,000. So you're getting substantially more in a standard tax deduction by making them your spouse than trying to claim them as a dependent. Okay, so I just want everybody out there to know that the benefits being common law married, spiritually married, married, married filing joint just for our taxes. I don't know. But that's the benefit. You can claim girlfriends as dependents, but you're only going to give $500. And we know we cost much more than that. So, can I be claimed as head of household if I live alone? To claim head of household status, you must be legally single, pay more than half of the household expenses, and have either a qualifying dependent living with you for at least half of the year. So if you're single with no kids, you file single. If you're single with kids, you're head of household, and that's the difference. It's not a title of superiority. Because I'll have a lot of husbands or wives come in. I'm head of household. No, you are married, filing joints. Know the difference. Okay, friends. Sorry. But can you claim 6 dependents on your taxes? How many dependents can you claim? Although there is no limits on the specific dependent credits, there's no maximum number of dependents. There's no maximum number of dependents exceptions to your claim. So if a person meets the requirements for qualified child or relative living in your household, you can claim them as a dependent. So there's no limit. You can have 18 children and they can all go on your tax file. Another question that we get is, can you claim a child that does not live with you? So we have a lot of situations where children are in a divorced home and both parents want to file them because I pay this and I pay that, but the kid only lives in one place. So wherever the child resides is where the child will get claimed, unless there is a court order agreement. What do you mean, Jess? That means the judge came by and said, hey, you get to file the child 1 year, and then you guys alternate years. You get odd years, you get even years, and that's just the way it is. If they don't have that, then no. The child can legally be claimed where they reside. And if someone does anything janky, well, then that's between them, God, and the IRS. Okay, let me take a sip of my coffee. So, that's the only time that you can claim a person that does not live with you is if it's court ordered. Can a stay-at-home mom claim child on their taxes? Yes, you can. You can do that. If you do not have income, you can still claim your children on your taxes. So, but you need to be actively seeking employment. So, what is an income tax return in the first place? I don't get that question a lot, but I think that question needs to be asked and explained. An income tax return is a return on the money that you have paid throughout the year. It is a refund on the money that you have paid throughout the year. So if you have not paid any federal income tax withheld, guess what? There's not going to be much refund that you're going to get back, right? Because you're going to get the refund on the money that you paid in, plus any credits that you deserve. Keyword deserve. Okay, you have to deserve it, meaning that you fall in the proper qualifications of receiving this credit. Now, there is multiple credits out there to get. There's multiple refundable credits that are out there. But what's the difference between a refundable credit and a non-refundable credit, Jess? The difference is one you get back and the other you don't. Well, what does that mean? It means it's a credit that you don't receive. It's like a store credit that has to stay within the store and you could use it within the store, within the tax year, within the tax file. And the other one is where it says, okay, yeah, you overpaid. Here's your refund. So let's talk about it. Let's get into it. The refund is a non-refundable credit would be like your dependent care credit. You have kids, they have after school programs, you're paying like $1,000, $3,000 a year just for your kid to go after school because you have to work. $3,000, dang, out the door. But the government gives a non-refundable credit, and that goes against your tax debt. So let's say if you don't owe any taxes for the year and you still have this child care and you think that it's going to do something for you, but it's not because it's non-refundable and you don't have any tax debt. Okay. So, but I digress. Let me go back. Let me re-explain that a little bit. What you would receive a refund on is the money that you paid in. So let's say, for example, you made $10,000 for the year. $1,000 is your tax bill. But because your standard tax deduction is $18,000, that means, boom, you don't know anything, right? Because your standard tax deduction exceeded the amount that you made. You don't have any tax debt due. There's nothing left to do. So if you paid $1,000 in, guess what you're getting back? Anyone can guess? $1,000, right? You don't owe anything. You paid it in. Now you get it back. That's how it works. Okay. But I also paid childcare. Shouldn't I get more? No, you're going to get $2,000 for your child. So you'll get that $1,000 plus the $2,000 for your child. But I paid childcare. I should get more. No, because you did not have any tax debt. And this is a non-refundable credit. So no matter what you pay towards it, it only goes towards your tax amount due. If there's nothing due, then you don't get anything back. Are we clear on that? Okay, good. That's the difference between refundable credits, child tax credit, and non-refundable credits, which is dependent care credit. All right, so I digress. Another question that we get has to deal with business returns. Business returns. What are the business deadlines? Well, you can actually start filing and start accepting business files on the 12th. That's tomorrow. Boom, boom, boom. And again, if you wanted to e-file, we're here, we're ready to help you. Okay, you can start e-filing now, but if you had your small business, you want to fill out your profit and loss sheet, you want to get your balance sheets together, there is a difference. And we can help you out. Okay, but you can start filing as soon as the 12th. And an important deadline for you to understand is that the deadline is March 15th. It's not April 7th or 15th. You don't have as much time as individual people. You need to get it together and get it done now, or there will be penalties for not filing. They are harder on businesses than they are on individuals. If you don't think that you're going to make it, hit us up. We'll file the extension now. That's it. Be proactive and preventative when it comes to your life. Okay. Another thing that I'm getting is, what is the small business tax credit for 2022? Pass-through business owners like S Corps, LLCs, partnerships, or sole proprietors, partnerships, regardless of the type of business that you own, that you can claim up to 20% of a tax deduction on your share of your business income up to $182,100 in the tax year of 2022, or $364,200 for those filing jointly. Will my business get a tax refund? Most small businesses don't receive an IRS refund because they don't pay taxes. What? Hold on, let's run that back. Most businesses don't pay taxes. There might be something to that there. That must be why Jessica's always saying, file an LLC, get your business going, because most businesses don't pay taxes. Okay. Now, I'm always telling you guys that you need to have a business that synergizes with your life. You need to have something that you intend to make more money. Who doesn't like more money, right? Anyways, but you want to have something that synergizes with your life, because businesses don't pay taxes. What happens is that you go through and you make your money throughout the year and you settle up later, because it costs money to make money. You're using your cell phone, you're using your internet, you're using your home office. Everything in this video right here is a write-off. I have MAC lipstick on. It's a write-off. Okay, I'm wearing, well, I guess my Versace cologne is not, or my Versace perfume is not something you can smell from the camera, so it's not a write-off. But these people do. These people smell me. Just playing. Okay. I'll digress. All right. But most small businesses, they don't receive an IRS refund because they don't pay any taxes. So at least not directly, right? It's all pass through business, including sole proprietors, partnerships, LLCs, corporations. Many filers who file a tax return don't have taxable income at the end of the year because they write it off. Okay, and there's not very many credits for businesses either. Like there is credits that there are for individuals. As an individual, you have an earned income credit, an American Opportunity Credit, child tax credit. Those are things that you can pull through even if you didn't pay any income tax throughout the year. And here's just a fun fact: 47% of Americans don't pay any income tax. Okay, 47%. So that's a topic for another day. But just saying, most of your refund comes from credits, unless you paid in massive amounts into the IRS, such as some of my clients who pay $50,000, $60,000 in taxes every year. That's crazy, right? It is. Let's see, what else? Are small businesses getting stimulus money? Businesses located in California with fewer than 750 or fewer employees that have been negatively affected by COVID-19 were eligible for some stimulus money. Matter of fact, there were 19 states. Did y'all hear about that? 19 states that actually received a third stimulus through their state. Now, if you reside in, and this is for individually, so like if you reside in Virginia, South Carolina, Rhode Island, Oregon, New Mexico, New Jersey, Minnesota, Delaware, Massachusetts, Maine, what else? Indiana, Illinois, Idaho, Hawaii, Georgia, Florida, Colorado, California, and Alaska. Those are the 19 states that actually received another stimulus check. So when you're filing your state returns, that's most likely going to be on there, and you'll have to look out for that. Again, if you need help filing your business, state, or personal return, KARME is here to help you. We know all of the laws and know how to get you the most out of every credit and every dollar that you deserve. Okay, so how do small businesses get a big tax refund. You got to pay in big, honey. Listen, we're not shy to businesses getting a big refund. One of our members got a $400,000 refund. 400,000, but you know how much they paid in? 1 million. Okay, so to get a tax refund, everybody say it with me. I have to have paid money in. The end. Like the end. To get a big refund, say what? I have had to pay money in. You have had to pay money in to get a big refund. The end. I get everything that I paid in plus every dollar or credit that I deserve. Say it with me. Everything I paid in plus every credit I deserve. All right. So there's tips to maximizing the eligible refund. One, checking if there's any available states and federal credits, tax credit, preparing a business, expenses for the year, providing 401k matched plans for your employee. That's a way to get a refund. Offering incentives to employees as a deductible business expense. So one of the things that we do here at KARME is when we give out bonuses, we 1099 them. The reason why we 1099 them is it allows our staff to take things like mileage, to expense things like their phone, their personal space, their computers, their commute over to us. It allows them to maximize their refund and their opportunity to save on taxes. If you're a small business owner and you are watching this, I'm encouraging you to do that. You give them their W-2 wages, but you make sure that you 1099 their bonuses. That way that they can maximize their tax refunds. Okay, let's see, another questions. Is the EDL grant available? As of January 1st, 2022, SBA did stop the application process. And no, the EDIL loans are not available. How is the government helping small businesses? Well, they've done a lot to actually help small businesses when it came to the pandemic and helping people grow. There's also this Employee Retention Act that if people are still that were affected and they are affected or been affected or continuously being affected by what happened in the pandemic. A lot of the times what happens, the pandemic is the stone, right? But when you drop a stone in the lake, what happens? There's ripples. There's many ripples for many, it goes on and on and on and on until it all calms down. And that's where we're at right now. We are at the point of ripple where the stone has dropped. It did make a big bloop, right? But there's ripples that are happening within our economy and that we have to prepare for. And a lot of people are asking the question, I mean, are we going to get a stimulus check? Well, no, we're not. No one is coming anymore. No one is going to come save you. You need to get up. There's many opportunities to work and gain employment. They are not printing any more money at all. And they can't. And I know it makes the people like, oh my God, digital currency is coming. But no, y'all, it's not even that. It may be a little bit of that, but it's not even that. It is the fact that as long as they're printing money, the value of our dollar goes down because it is not backed by gold anymore. So what good is if everybody has the dollar? What good is the value of the dollar? There is none. So they have to stop printing money because otherwise inflation will continue to go up and someone's hoarding the money. Someone's going to get it, right? So is it you? It could be you. You got to get up and get it though. There's a million ways to make money. And this is why I want you guys to tune into our Side Hustle Saturdays. It's where I show you how to make money online in your spare time, doing things like, writing children's books or translating or reading books just into a microphone, just like this. A lot of different things that you can do, making money from home as long as you have internet connection. I'm going to show that all to you. So, no, The government is not coming to save you. Matter of fact, if you have a little extra money, I suggest that you start investing in gold and silver and land. Those are the commodities that are going to grow. And the thing is no matter how hard we complain about something, no matter how we throw a fit, and we're like, oh my gosh, digital currency. The thing is that we're all in this river called life. We're all in the same boat together. And when we cannot control the landscape. If we are turning, we are turning. If there is a bend in the river, there is a bend in the river. The only thing that we all can do is lean to one side and row this boat down the river, and that's it. So you got to prepare yourself as much as possible. Make sure that you have your life vest on, that it's fastened in, that you are ready to be thrown if you're thrown, and stay on the boat. Okay? Be proactive and preventative when it comes to your life. It's much better than being reactive and defensive. What else are we getting as far as... No, nothing much as far as taxes. I'm getting some things about the tax income bracket. Any deductions? Let's see, and I've already answered this. Oh, this is a good one. So what tax breaks do small businesses get? Small businesses get a lot of tax breaks, actually. And this is why I'm always suggesting that you need to start your own business. And if you do need help starting your own business, that is something that we do here at KARME. We do business formation. Matter of fact, we will sit down, we will game plan with you. We'll help you strategize and make sure that your business is structured properly. We're going to do a trademark and a name research for you to make sure that your name is solid. And then it comes in this nice, beautiful binder. It's totally worth it, totally legit. And it's the most value that you'll find here on the internet. It's better than LegalZoom, I promise you. Okay, I personally made sure of it. So some of the top business deductions that you have is meals. Small businesses can reduce 50% of your meals for purchases, for qualified purchases, whether you're having meals with your clients or you're having meals with your employees. We just bought Starbucks for the office. It's a write-off. Yummy, delicious, Starbucks. Oh my gosh. These were predominantly female-owned and operated business, not by choice. Men are welcome, but this year we were all female at the company Christmas party. What do? We went and got our nails done. You like them? It's a write-off. Okay, I do videos not only here, but in my spare time because I lead by example and I show my customers Facebook Reels and Instagram is the easiest way to make money in your spare time, just living your day-to-day life. And I did that. And now groceries are so expensive, but guess what? Because I have the intention to make money, it's a write-off. Okay, I'm gonna show you how to do it. I'm telling you, I told you to like, comment, and subscribe, and I mean it. You're gonna want to subscribe to me. Okay, so any work-related travel, went to Florida, booked a few appointments with a realtor, went and looked at rental properties and Airbnbs. Guess what? 85% of my trip was, for business, but the other 25% that I got to spend with my kids, hee-heeing and kikiing on the beach with a margarita, scuba diving, get stung by jellyfish, that was all a write-off. Any work-related car use? I already told you what we do for our associates here. We bonus them. We bonus them and 1099 them. That way their car-related expenses is a write-off. Business insurance, office expenses, we just restocked everything. Because it was like Christmas in our office. Got these pens. It was like Christmas in our office, just unboxing everything. I should have done unboxing videos, but yeah, I don't care about that. All of it's a write-off. Phone, internet, all of it's a write-off. Having a business helps you synergize your life. Matter of fact, if you don't have any business ideas and you're just like, dang, what can I do? What can I do business-wise? Listen, KARME offers an amazing opportunity where we'll send you a sign to put on your car. We will give you a promotion code and an affiliate link so that you can be a social media influencer. And that way your miles can be legitimate business expenses. That way your phone, your internet is legitimate business expenses. All you have to do for it to qualify is for you to make $600 with us in a year, which is super easy just by referring your friends and family. All you have to do is make $600 with us in a year, and then all of that stuff is a write-off, legitimate write-off expense. We'll send you a 1099. You can write all of this stuff off on a Schedule C because it's it's something towards you. It's something towards your ownership of extra income, and you're going to need it this year because they're not printing money. There is no stimulus checks. No one's coming to save you. You're either going to have to get a job or start something yourself. But the great part about all of that is the opportunity is endless. It is endless. Okay. What else are we getting as far as tax savings for 2022? Let's see. Any other questions? Let me look in the comments. Let me see. Okay. Will 2022 taxes be lowered? When it comes to federal tax rates, specifically in tax brackets, the tax rates themselves aren't changing from 2022 to 2023. They're not. So everything will be the same. If you fall into the income tax bracket, and I will post a link for the IRS website so where you can see where the income tax brackets are, they go up to 37%. So the maximum that you're going to be taxed is 37%. But here's a fun fact, friends. Here's a fun fact, friends, that the income tax used to be 75% in 1945. 75%. Could you imagine making $1 million and having to pay $750,000 into the IRS? What the fudge nugget? What the fudge nugget? That would make me outraged. Outraged. But good old Ronald Reagan came in and he was like, no, sir. No, sir. And he lowered that down. So thank you, Jesus. But we do not want that ever again. Ever again. We want to be able to make as much money to live a life of prosperity with our families and be able to give the way that we want to give and be charitable the way that we want to be charitable. 37% is more than enough. More than enough. But you know, the fun fact about it is, like I said, business owners have ways in reducing that. And so you want to always have a side hustle. And if you need help starting your business, you can reach out to us. We do business formation, we do payroll, bookkeeping, anything to help you scale your business. And what I'm saying about bookkeeping is we do strategic bookkeeping. You know, we're not regular CPAs where, you know, we're just putting in data and your bills are your bills, you know, whoop-de-whoop. We're going to tell you where you're jacking up. Okay. We're going to tell you, hey, you're jacking up and you're going to have an outstanding tax bill. You're going to spend so much money. You're going to get fees. We're going to let you know you are jacking up and what to do. And now it's up to you. We're going to tell you the law. We're going to advise you where to go. We're going to tell you how to do it, but it's up to you to actually do it. Okay. I am no gatekeeper here. I'm going to show you how to do it, but it's up to you to walk through the door. You feel me? So that's another way that we separate ourselves. We can help you start your business and we can help you scale your business through strategic bookkeeping and accounting. You'll want to do your business formation with us if you're ever frustrated with your CPA. I'm not strategizing with you, not letting you know, not alerting you to problems, not alerting you to whenever you're jacking up. I mean, geez, I don't know. So that would make me feel like I'm just throwing away money this way and that way. That would make me mad, honestly. I'm so glad I don't have to worry about that. I have a whole team of people that are out here just doing it right for us, you know, and you want that feeling in your background. I want you to have that feeling too. So another question that I just got is how can I save money on my taxes in 2022? Okay, so you can save taxes a million different ways, actually, but I'm going to give you the top three. Okay. The top three is one, you can choose to defer your bonus. So depending on how your bonuses get paid, you can defer your bonuses. But again, I would say ask them to bonus me out of the 1099. You can prepay future medical expenses. So if you have a chronic illness and you know that you're going to have these expenses, you can prepay them. Those can go towards your tax debt in 2022. You can maximize your tax bracket with a partial Roth conversion. You can invest into a Roth IRA. Man, that's the difference between winning strategies and losing strategies, my friends. having that Roth IRA. See, because the thing is that we're running out of money. In 12 years, and I know that they've been saying this ever since that I can remember. They've been saying that Social Security will run out, but I promise you, we are not solvent as a country. We are not solvent. And until we become solvent, we are at risk. I mean, how old are you now? And in 12 years, are you going to be retirement or close to retirement? Yes, you will. What do you have currently in retirement now? There is a reason why the government incentivizes you to take out a Roth IRA. It's because, or a traditional IRA, excuse me. There's a reason why they want you to take out a traditional, means it's outside of your employer, is because we will be broke. There will be a whole bunch of old people who don't have any income. And that's the future. And so what's going to happen is they're going to have to, if they're lucky enough, they get to live with their kids. But what is the most top two wealth drainers in America is unprepared parents and illegitimate children, unplanned. Okay? Meaning that we're in now a single income household and you may have 2 or 3 children. Okay, those are all things our parents, we get our, let's say for instance, and I'm going to use myself as an example, and don't cancel me. Don't come for me in the comments because you're like, yeah, well, yeah, my kids are a blessing. I'm sure they are. I'm sure they are. I'm not saying that your kids aren't great. I'm just saying that they're making you poor. Okay? It's expensive. And if you disagree with that, you must be in the top 1.02%. Okay? But for the rest of us who can't afford, $1,000 a month for childcare, or $1,600 a month for childcare, which is about the same amount as a 1-bedroom apartment. For the rest of us whose prices of diapers gone out, there's a formula shortage, can't find anything, to feed, clothe, bathe. Well, okay, bathing is a little extreme, but I'm just saying there's a lot of expenses when it comes to young children and older parents that just absolutely drain you, period. Parents aren't planning for hospice. Parents aren't planning for retirement. They have to live with the kids. The kids should be grateful for whatever the parents done did to make them wherever they did, or whoever they are, right? Now you got a whole portion of your house dedicated to mom. Mom's not bringing any income, and she gets sick. Who's going to pay for that? Now what? Now you're pulling from your retirement. Now you're pulling from your investments to take care of mom, because of course you're not going to let mom go. You're not going to let mom suffer. But that's the number one wealth drainer. So the government is incentivizing you to contribute to your IRA because they do not want another generation of unprepared people. Period. Our government cannot afford another generation of unprepared people. Period. Okay, so contributing to a traditional IRA, you can max that out at $6,000, but if your employer doesn't offer you a 401k, you can put as much as you need to in there, honey. Let's say you're in a commission-based structured job and your company does not offer you a 401k. You can put up to $62,000 in your IRA. Now, that's if you can afford it and if you need to, but could you imagine being in the position to being able to say, oh yeah, I need to put $62,000 into my IRA to prevent me from spending on taxes? That would be an amazing problem to have, right? That's an amazing contribution to your future, right? I mean, and to get 6% interest, compound interest on that. Geez, talk about smart moves and winning strategies. We can go on, but that's a topic for another day. I'll answer a couple more questions and then we will be done. What are the changes for the standard tax deduction amounts? Okay, what are the changes for 2022 taxes? Okay, so the standard tax deduction amounts were increased for 2022 to account for inflation. So married filing joint couples get 25,900 as opposed to back in 2021, there was 25,100. So, you know, an $800 increase plus $1,400 for each spouse age 65 or older, which was different for 2021, which was $1,350. Okay, so a $50 increase. And then lastly, let's answer one more question. This is a good one, and I love to hear it. Not that I haven't just gone over it, spent the last, 20 minutes reviewing strategies on how to lower your taxable income, but I got the right question. How do I lower my taxable income? And I'm just so happy to share that with you. One, like I just said, number one way, winning strategy is to contribute a significant amount to your retirement savings. Like max that thing out. Max it out. It's paying your future self. Like you can either choose to be broke or you can choose to be wealthy. It's all the matter of the sacrifices that you're willing to put in now. You can participate in an employer-sponsored savings account for childcare and healthcare. I'm going to say a health savings account is a wonderful thing to have. You're going to be able to lower your taxable income by contributing to that. And then, of course, you're going to have that savings account, that health savings account, like they're built up. So if you do have life hiccups, I mean, it's right there. It's a way to protect your budget. It's a way to protect your health. And you want that. Like, why risk? Why do people take such gambles when it comes to their finances? This is our bread and butter. This is the resources we keep in our cabinet to make bread and butter. Why are we taking a risk with it? You need to pay attention to tax credits like the child tax credit, the retirement saving contributions. I'm not saying to go have children just for the credit, but that's one way that you lower it. Okay, so if you don't have any children, then sponsor your nephew. I'm just playing. Don't do that. Don't do that. And then of course, if you're taking any losses when it comes to investments, but I don't really advocate for losing strategy. I advocate for you to have a business that synergizes with your lifestyle. So for me, like I said, I lead by example. You can follow me at Miss Jessica Olvier, or you can follow us at my KARME. Everything in my videos, from my groceries to the juicer to my cutting boards, my knives, everything that I buy for that video, my outfits, they're all a tax write-off. So you want to find something that synergizes with your life, and as long as you have the intention to make money and you're making legitimate strides to build a business, to have extra income, which everyone needs. Everyone needs it. Everyone needs to pull together. Everyone needs to be working. Everyone needs to be contributing. Then you have write-offs right there at your fingertips. Okay, so again, I'm just going to go ahead and let y'all go. I'm done for today. If you have any questions or think of anything, please leave them in the comments. I will be here and to come back and answer these questions. Again, you can start filing your pre-tax advance now. The IRS starts accepting business returns tomorrow. Business returns are now going to be accepted tomorrow. So if you have a business return, your profit and loss sheet and everything together, we'll be happy to help you get ahead of that and get started before the rush comes. January 24th is when personal tax files are then accepted. If you have an earned income credit or a child tax credit, you can expect that to be funded on the mid-February or late February. If you cannot wait that long, remember the cash advance is available. You can get $7,000 in a cash advance or up to $7,000 in a cash advance for a small fee through Santa Barbara TPG, and we can assist you with that. And again, biggest top strategies for the year is to invest in your traditional IRA, which we can help you with that. We can help you with annuities, life plans, IULs, infinite banking systems, all here at KARME to help you strategize. If you are a business owner and you need strategic bookkeeping, you want a bookkeeper that is going to think tax wise, then this is the place that you want to be. If you want to structure your business from the beginning to end, then you want to be here with KARME. And that is all for now. I will see you in the next video. I love you so much for tuning in. We thank you so much for your support. Share this with anybody that will find value out of this video. Like, comment, subscribe. And you know what to do, members. If you like, comment, and subscribes, it all goes towards discounts on your services. Who wouldn't want to be a part of that? Thank you so much, and you guys have a great day.